Hi everyone, it's Ifti here from CLiK Trading Education. Welcome to your weekly market roundup for the week ending 5th December 2025. It's been one of those weeks where the markets looked calm on the surface, but underneath, let's just say the ducks were paddling like mad. This week delivered a fascinating mix of steady indices, lively commodities, and a bit of political theatre because, well, global politicians love to keep traders on their toes. Silver absolutely stole the spotlight, stocks stayed composed, and the geopolitical calendar did its best to spice things up. Let's start with the major indices. S&P 500 held strong on key support. Nasdaq saw tech leaders dragging it higher. FTSE 100 continued its great love affair with consolidation. DAX stayed cautious, very on brand for Europe. Top movers included silver up 3.61%, easily the star of the week. AUD USD up 1.56% thanks to China's stimulus. Crude oil up nearly 2% on geopolitical tension. USD JPY down 0.46% as Japan whispered, maybe, just maybe, we'll normalize policy. Three big forces shape the markets. Economic surprises, we got that classic Goldilocks data mix. Political pressure, the US flirted with shutdown headlines again. Hidden volatility, calm indices, but wild rotations under the hood. It was one of those weeks where the headline said quiet, but traders definitely didn't feel quiet. The US non-farm payrolls were the perfect contradiction. Solid job growth, but softer wages. That created the Goldilocks scenario that markets adore. Not too hot for inflation, not too cold for recession talk, just right for risk assets. Tech stocks loved it, the dollar softened a bit, and silver said, thank you very much. China fired its stimulus cannons again. Liquidity injections, developer support, the full toolkit. This boosted AUD USD strongly, industrial metals, global sentiment. As always, when China spends, commodities listen. The BOJ hinted, very lightly, that policy tightening could arrive in 2026, and that's all the yen needed to flex. USD JPY dropped as traders priced in the tiniest whisper of normalization. Honestly, if the BOJ even coughs, FX markets react. Washington brought back budget standoff headlines because it's December, and that's apparently tradition. Nothing dramatic yet, but traders kept one eyebrow raised. Tech felt a bit choppy, bond yields dipped, and defense stocks were watched closely. Tensions in the Red Sea elevated risk premiums in crude oil, pushing prices up nearly 2%. This wasn't speculative. With around 12% of global trade passing through the region, any disruption immediately feeds into energy markets. Silver was the clear winner at plus 3.61%. Why? Industrial demand, China stimulus, technical breakout, and the classic momentum chasers jumping on board. Meanwhile, AI tech stocks also had a big week. Tesla, Meta, Nvidia, all posting solid gains. Next week is packed, and several events could move the markets hard. One US, CPI and PPI. The big one. Inflation data next week could reshape expectations for the next Fed meeting. Expect volatility. 2 Bank of England member speeches. Any hint of rate cuts or extended pauses could jolt GBP pairs. 3 German ZEW sentiment, a crucial leading indicator for Europe, often moves USD and DAX before the data does. 4 US consumer confidence, huge for holiday spending projections and Q4 growth. 5 OPEC meeting minutes energy traders. Consider this your popcorn moment. For newer or struggling traders, here are your key reminders. Your job isn't to predict, it's to prepare. Volatility is opportunity if you manage risk. Keep a trading journal. Your patterns tell you the truth. Confidence must be backed by structure, and you don't need to know everything, but you do need to learn the right things. It was a deceptively calm week on the surface, but underneath the market was responding to data, politics, policy shifts, and global tensions. If you felt overwhelmed, normal. If you felt overconfident, also normal. Both improve with proper process and training. That's why we teach traders to think in frameworks, not feelings. Thanks for joining this week's Market Roundup. If you found the insights helpful, remember to like, share, and stay tuned for next week's analysis. And if you want to learn how to trade with structure, confidence, and community, visit CLiK Trading Education.com. See you next week and happy trading.